David here, your certified remote financial planner, using technology to make financial advice available to you on your schedule and wherever you may be. It's that time of the year again, tax season. Everyone's gathering all their documents, their W-2s, 1099s, 1095s, 1098s, K-1s. But what the heck does all this stuff mean? The truth is, if you want to get the biggest refund possible, it's important to understand your tax documents and how your decisions throughout the year affect them. That's why I'm doing a series of posts to help you understand all of the information that's thrown at you during tax season. And today, we're starting with the most common tax document, Form W-2. So, first, what is your W-2? It's a wage and tax statement that is generated by your employer to report to you and the government a handful of information about your compensation, your benefits, and the tax withholding throughout the year. The first question that a lot of people ask about the W-2 is very simple. Why do we get 4 copies of this thing? Well, now most people file their returns electronically, so having multiple copies is irrelevant. But some people still prefer to file their returns on paper, in which case they'll need to staple 1 copy of their W-2 to each return, their federal, state, and local returns, and that leaves 1 copy for them to keep to themselves. Makes sense, right? And the next question I hear a lot is, why don't these numbers match up? My Social Security and Medicare wages are higher than my other wages? The most common reason for this variance is pre-tax contributions to retirement plans like 401ks and 403bs. These contributions reduce your wages for federal and state tax purposes, but not for the calculation of Social Security and Medicare taxes. So invariably, this answer always leads to, so what are Social Security and Medicare taxes? These are commonly referred to as payroll taxes. They're mandatory payments into the country's 2 big welfare systems. Social Security tax is 6.2% on your first $118,500 in wages. These tax payments accumulate over your working life and increase the amount of retirement benefits you'll receive from the government when you retire. Medicare taxes are 1.45% on your first $200,000 of wages and 2.35% above that. This tax pays for medical insurance for people over age 65, which you'll be able to apply for once you reach age 65. The next question that people have is, why don't my W-2 wages match my pay stubs? Well, your pay stub could be higher because of pre-tax retirement contributions, health savings accounts, commuter benefits programs, insurance payments. All of these things reduce your taxable wages. It's less common, but it's also possible for taxable wages to be higher than your pay stub if you received life insurance coverage or tuition assistance from your employer above certain levels. The next thing that people like to ask about their W-2 is, which things on this are taxable? For the most part, the number reported in Box 1 already factors in all the taxable and non-taxable benefits that you receive. However, depending on the choices you made throughout the year, that can change. Box 10, for example, reports dependent care benefits, which have already been deducted from your wages. However, if you don't provide the proper documentation when filing your return that all of the benefit in Box 10 was used for dependent cares, a portion could be added back into your wages and taxed when you file your return. Box 12 is the most important and exciting part of your W-2 and produces lots of questions. It's full of amounts and codes. Some of the most common are C, taxable cost of group term life insurance, D, E, and G, which are pre-tax retirement plan contributions, AA, BB, and EE are Roth contributions to retirement plans. W is health savings accounts, and DD is the total cost of employer-sponsored health coverage. You can find a full listing of all the codes and their meanings on the back of your W-2. Many of the decisions you made during open enrollment flow through to this box and may reduce your taxable income and help save you money. So as you can see, by the time tax season rolls around, most of this stuff's set in stone. That's why it's so important to know how your decisions are going to affect your W-2 and the amount of taxes that you're going to have to pay. Then you can decide if you want to contribute more to your HSA or retirement account, or if getting that extra tuition benefits is going to increase your taxes for the year. So for more information about Form W-2, be sure to check out the post. And if you want more information about understanding tax season, make sure you subscribe to this YouTube channel, my weekly blog, or schedule a free 30-minute one-on-one call with me, your certified remote financial planner, using technology to make financial advice available to you on your schedule and wherever you may be.